Morning, big bro.
Top of the morning, bro. I know you see what's happening.
Yes, sir.
Yo, it's crazy because I know a lot of us seen this happening. Like I seen this happening a while. I just been waiting for this. You know what I mean? And now it's really started. There's all these things happening. Like you heard about the jobs. Like they're cutting a lot of jobs.
Yeah, I saw that.
Yeah, cutting a lot of jobs. So basically unemployment is too low. It sounds crazy to say, but unemployment is too low. So they're going to be cutting a lot of jobs. We all know about the lockdowns in China. We all know, you guys seen the real estate? Like, actually, I wanted to show you guys that this right here. Go to the ticker. Like, if you look at the mortgage rate, like a mortgage was like, I think in November, it was like 2.8%, and now it's like 5%.
Yep.
Yeah, that's scary.
Yeah, I was reading the article, or no, it was some guy, some economist on YouTube, and he was talking about it. He was like, "This is getting wild right now,
Look
man."
at this. You guys see this?
Wow.
So back in August, it was last year it was 2.9. Now you get in the house, it's 5.28%, 30-year fixed mortgage. That's crazy. But think about it too, like it's gonna affect everybody because those people, a lot of houses are gonna have to drop their prices down.
Yeah, that's the big thing. That's what I was thinking. I said, wow, when that happens, man, whew, there's gonna be a lot of defaults on some loans, man. That's crazy.
And then this is right, XLRE, the real estate sector of the stock market.
Look at that.
It was on a run right up until April, like 3 weeks ago.
Yep.
And then if you go back in December, all-time highs. And then like, if you measure this, like use this tool right here from the all-time highs down to the bottom, it's down, look, 19%, 20%.
Wow.
20%. In how long? 22 trading days. You know what I mean? In 22 trading days, which is actually 155 days. Oh, these are weeks. Okay. So and actually it took 155 days, so like half a year. No, less than half a year. So like a third of a year. You know what I mean?
Which tool was that you just used, bro?
So do you see this ruler tool right here? This ruler, you can measure, like whatever you measure, it's gonna analyze what's inside the box.
Got it.
Yeah, so you don't gotta count it. You can let's say you want to know, how long did it take to go from the bottom to the top? So you can be like, drag this all the way up, and you can see this took 95 bars. These are weeklies, so 666 days, and this is a 121% rise.
Got it.
And 28 points up. So it's really good for analyzing, movement and the crash and stuff like that. So right now, real estate is in the bear market. Not just real estate. Like we can go through the sectors. You're gonna see utilities is all right. Utilities doing all right. So you can see the sectors that actually have a chance. Utilities, energy is doing great. XLE, energy is holding up well, even though it still has its bumps. The ones that's doing bad is tech. You already know.
Yeah, I saw that. Yep.
Look at tech. Wow, look at that. And you know what formation this has got? This is a head and shoulders right here.
Yeah, I saw it. Yep.
So this is a strong reversal pattern. And look, we're already at this point right here on pre-market. So this has a lot of down potential. Like tech is about to crash, guys. It's already happening. And then the main thing is, like, if you look at the SPY, it's down. So it closed. So let me go on the daily, right? It closed at 392 yesterday. And mind you see this, it had a pop in the morning. It couldn't stay. And here's what I've been saying is that every single rally has been getting sold off. Like every time it turns, since it started going down, every time it turns green, it gets sold off. Green sold off, green sold off, green sold off. And they tried to do it again yesterday in the middle of the day, sold off. So once I seen this, I was like, all right, I'm a bear now. Like this crash is getting ready to
Yeah,
actually
yeah,
happen. Is getting ready. And then like if I do the same thing and I do the tool on the ruler from all-time highs when we were at 478
okay,
down till yesterday. Look at that. So this is the daily. So 90 bars, that's 90 trading days, but 129 actual days.
right, got it.
And we're down 18%. And I don't know if you guys remember, once we're down 20%, we're in a bear market.
Right,
We're basically right there. I think today, because you see pre-market, we're down even more. So let me use this again. So if we measure up until pre-market, that would be 18.6%. Yeah, we're right there. By next week, we're officially in the bear market. Some people are already calling the bear market now, you know. And you could see like since March, we've been on a. I mean, we tried like since the beginning of the year, the market already been starting down, right?
Right.
And
Yep.
we try to come up ever since, and this was
Order
I
submitted.
think that was the first interest rate meeting, and then since then we've been selling off. So I'm comparing it to this. I'm also looking at like stocks that we can take advantage of. Like for example, Riot. So you guys know Riot, it follows crypto and Bitcoin. So here's a cool thing, right? If you can actually compare the two, and I recommend when you look at stocks, compare them to each other because you get to see how they're moving. So if I use this line right here, this little arrow, I can compare it to Bitcoin, and I'll make this orange line is now the price of Bitcoin. And now what's cool is that depending on where I start, it basically everything that's on the screen, it snapshots that and does a representation of the prices. So if I go to the weekly, just to make it more like broad, right? And you could see when Bitcoin really started coming up in 2020. And you can see as Bitcoin was coming up, Riot was coming up. As Bitcoin came up more, Riot shot up even more. You guys see that? Like
Wow,
Bitcoin's
yeah.
the orange one. So
Yeah.
like if I zoom in a little bit, like right here, yeah, you can. So it'll tell me. So right here, Bitcoin, like so from 2021, January 2021, Bitcoin is down 14%, but Riot is down 59%. So not only did it go up more than Bitcoin, it went down harder than Bitcoin. You guys see that?
Yep, I see you. I'm following. Yep.
Yeah.
Yes.
So as you're able to zoom in more and lock in, like let's say we want to lock in on just 2022, like this year. Or it's like right. I think this is the closest I get. So for the year, but now let's look at the year. For the year, Bitcoin is down 32%, Riot is down 66%. And that's since 2020, basically. And we could really do more comparisons. But the main thing is that from all time, Bitcoin is still doing better than, before 2020, but it's not doing good anytime near. So you can do this comparison. Another one I like to watch is Mara. Mara also is a big crypto stock. And you can see a similar thing, but you see it doesn't go quite, like when it went up, it didn't go up as hard as Riot did. I mean, it still went up pretty hard though. But you see that it's actually holding up much better than Riot. Let me start from the beginning of 2022. So for the year, Bitcoin's down 32, Mara's down 64. It's still down pretty bad. So these are opportunities that you could take advantage of if you know how to play options. But the other thing too is that the risk to reward for options, because the volatility is so high, oftentimes when you're buying the option, you're overpaying. You got to think about it like insurance. So
Yeah.
like not all insurance is created equal. So I'm actually thinking about even playing futures in a time like this, you know, just because I wouldn't have to deal with the volatility. But if you want to play options, you have to make sure you're getting in at a good price. You have to make sure. And let me switch to Thinkorswim. Let me log into Thinkorswim for a second. But y'all have any thoughts, questions?
Nah, I mean go ahead. I'm sorry. You good?
Well, thank you. I just the delta and the theta, I feel like is kind of fuzzy for me.
So theta is time decay, how much you're losing every day, and delta is how much you make if the stock moves $1. How much you make or lose if the stock moves up or down $1.
Okay, so delta, so theta is the time decay.
Mm-hmm.
Okay, thank you. I get them mixed up.
Yeah, and delta also, it's also the probability of it finishing in the money. So it also gives you your chances, but the chances change all the time, you know. But so for example, if you buy like a 70 delta, that means that there's a 70% chance it's gonna finish in the money.
Okay, got it. Thank you.
Yeah.
That was helpful.
All right, so let me go on Thinkorswim. All right, I'm gonna go on Thinkorswim. All right, share. All right, you guys see my screen?
Yep.
All right. All right, cool. So yeah, so I'm in some losing positions right now just because I overpaid and also tried to trade while I was traveling. Not a good idea. But still, you know, you can still stomach it. So here it is. So I have these 2 positions on SPY. My average cost, I got 14 contracts at $13.80. Right now they're going for $7.50. So I'm down $98 on that. I got this as a feeler, a tester, right? Because this is one of my crash puts right here. The July 15th, I feel like that's long enough where I could really capture a big amount of this move, because this might continue for months, or it might slowly inch its way, you know. So anything could happen. So that's why I bought this, just to test it out. It has 64 days to expiration, July 22nd. You bought it for 43, and right now it's going for 33. And I understand that losers is a good way to take advantage, because that means that if I had, like if I went on Robinhood, if I went on Thinkorswim or E-Trade, I can go back, buy the option that I believe in, that I'm down on because I got in too early, and get it at a cheaper price. And then when it goes back to the old price, I can come up. So this is an opportunity for anybody to come up if they believe in the loser. You know what I mean? And then the VIX, you know, I'm also playing the VIX. I bought a VIX call, but this is a weekly. So this is short term. This is Friday. You know, so I put $21 on the line. Let's see what happens Friday. If Friday is too early, I get clapped. Okay, then I have these that are expiring on the 20th. So that's the following week, because things are moving really fast, and I want to try to take advantage of it, but I also have to fill it out, you know? So I think these July puts, even though it's far out the money, after July, I think I'm going to buy some more of those. You know what I mean? And it's but it's all about the risk to reward. How much can I get from it? So like, let's look at some SPY puts right now, because there's different ways you could play this. You can play long, short, quick, you know, take your time with it. But the main thing is you want to be safe, and you want to have a margin of error where you can have a stop loss and get out in case it wants to. Because the worst thing for options is when it's going up and down, up and down, up and down. All it's doing is eating at your theta, you know? Like you're not getting a fully legit move. All right. Let's see. Yeah, so these are the ones that I have. So the ones I have right now, right? And is that $300 call? Yeah, that's what I have, right? Let me see. $300 put, $300 put. So look at these, right? So this is how I would find out like what needs to happen, right? So you can see the $300 put right now is going for $7. Open interest 16,000. No volume yet. The theta is 0.03. So I'm losing $3 a day holding this, but the delta is 0.01. So you see, I need quick movement to really make money off of this. I need quick movement because it's like a 3-to-1 ratio. It's like if it stays still for a day, I lose $3. But if it moves, every time it moves a dollar, I make $1. You know what I mean? But luckily for me, the market has been moving a lot. You know, like especially like, let's go to the SPY. So look at lately. The market has been moving a lot because you see on, this is the daily. Yeah, this is the daily. So you see the past 3 trading days, it's been moving up. I'll say, let's see, 405 to 398. That's a good 7 points, 7-8 points. So the market's moving a good 7-8 points a day. So if you do the math, I can make $7 a day if it moves that much in my direction versus me losing $3 a day. Does that make sense to you? April, I think you were asking about theta.
Yeah. So you're saying the closer it gets to your number, that's the amount you're making, the theta.
So no, the delta. So the delta. So right here, you see the delta for this right here is 0.01. Yeah. So every time SPY moves $1, okay, the option makes $1. Gotcha. You know what I mean?
Okay. Every time it moves. Okay.
Yeah. But the theta is $3. So if it doesn't move, this option is losing $3. You get what I'm saying? Okay. So it's like a battle. I'm losing $3 a day, but every time it moves $1, I make $1. So can it move enough in a day where I could beat the theta?
Okay.
That's basically it. So looking at SPY right now, it's moving a good, like, and on TradingView, I like looking at TradingView. On TradingView, if I go to SPY, you know, and honestly, the SPY is the best thing to trade, guys, because this is a good chart. SPY versus Bitcoin. Let's look at this. Look at SPY versus Bitcoin. So the SPY, and I'm gonna start at the beginning of the year 2021. Let me go to 2022. I'll do both. So 2022. All right, 2022. SPY is down 15%. Bitcoin is down 32%. So Bitcoin is going down faster than the market right now. And if I go to 2021, look, so 2021, SPY is up 6% from last year, even though we're down this much because we come down so much. Bitcoin is down 14% from last year. Now let's go to 2020. 2020, Bitcoin is actually up 244% from 2020. The SPY is up 24%. So it's like, it's all how you look at it, guys. Like, that's all where you're starting from and how far out you're planning to be in it. But
right, got you.
Take this out real quick and just focus on SPY, right? And I'll put the lines. All right, so these are my lines, some of my levels. But you see, we hit that 380. I mean, 470, almost 480, 470, and you see we're down about 100 points. That's crazy. You know what I mean? And wow. This is from the beginning of the year, guys. Yeah. So if we're not in a recession, if we're not beginning to be in a bear market, when are we?
Yeah, for real.
When? What else do we need? We got all these things stacked against us. Real estate. I showed you guys the mortgage rate earlier. Let me show you guys this chart again. So if you're trying to buy a house, man, I don't know. Look at the mortgage rate. Back in the beginning of the year.
It's crazy.
It was 3%. Back in November, it was 2.7. It had a low of 2.6 back in January of last year. We're at more than double. So as I was saying earlier, look at XLE. Look at the real estate sector. XLE.
The government need that stimulus money back.
This is another. Yeah, no, I'm sorry. This is energy. I'm talking about the real estate. XLRE. Look at this. This is the real estate. You know, it's looking worse than the market, I think. But you see, everything is falling. It's not just this. Is like it's many sectors that are falling. I think XLY. This is consumer discretionary. I think consumer staples is doing all right, but it's starting to fall. Let's see, XL.
You got him back? Yeah. Don't let him go. I'm trying not to.
The material sector is struggling to me.
No.
Yeah, this is the material sector. But the main thing, I want to do is look at SPY and talk more about SPY. So SPY is, you know, the market itself. So you're gonna notice a lot of companies just going down with SPY. And as you can see right now, SPY is down 389 pre-market. So SPY keeps breaking these lows, and like you gotta understand, these are levels from like last year. Like one, I knew it was gonna break this level because it had a gap to fill right here. So this 388. This is back in April of last year. Now we're back in March of last year. These are the levels that we're at right now. We're hitting March of last year levels. Everything we did, we're giving it all up. And I said we're almost at that 20% decline where it's officially going to be a bear market. Now the main things for me is looking at the past crashes. Like you look at, so look at this week. So this is the weekly. We've had 1, 2, 3, 4, 5, about to be 6 consecutive weeks of red.
Sheesh.
Now, compare this to the past. This is the crash of 2020. Yeah, 2020. But it was a bigger drop and faster. They had 1, 2, 3, 4, 5 weeks, and then the Fed pump, you know, kind of saved them. You know, this is the bottom of COVID, but I said this is a good 35% down. So if the typical crash is somewhere around 30%, and we're down about 18%, we still got more room to go. You know, and you could even look at even this cluster, 2018 crash. There's 1, 2. There's a bunch of consolidated weeks, but it took longer. You know, it took 1, 2, 3, 4, 5, 6, 7. Matter of fact, let me just use this. Make it easier for myself. So that's the ruler tool on TradingView. It does all the measurements for you. So it went down 19% in 12 bars. That's 84 days. And this is how much it went down by, minus 53. So the main thing is if you look at past crashes, some of them are short, some of them are long. Like look at this one. 2008. You guys remember 2008 crash?
Absolutely.
Mm-hmm. This one took way longer. 532 days. So that's basically 2 years. And it went down 56%. Damn. These are opportunities to become millionaires. Because you guys gotta understand, the 1%ers, they don't make their money when the market's doing good. Too much competition. It's when the market does bad, they're really able to come up. So I'm just looking at past crashes, and it's just kind of like giving me an idea of what could happen. Because right now, anything could happen. Anything could happen. And my only thing is, am I prepared? Am I prepared?
Right.
You know? And you know, so my next target, look, it's already hitting. My next target is pink line 389. I think it already hit it pre-market. So this, and mind you, pre-market doesn't mean that's what the price is gonna be, but the consecutively seeing that, it's really showing that the market is it's in extreme fear right now. And that's why I'm getting extremely greedy. You know? So going back to Thinkorswim and how some of these, actually let me go to that website for you guys to calculate what needs to happen for me to actually break even on the options that I'm down on. Because I got in too early, paid too much for this insurance. But if you guys are able to get in and catch these prices, I see an easy win. Let's see. So I want to, oh yeah, what do I have? Let me go and think of swim real quick. So I have all right, so the May 20th, the $300 put, right now they're going for $750. I watered them down to, the first time I got in, I bought like 5 of them at 25. And then I was like, oh, and then I had to water them down. So, but they expire next week, you know, and I'm done at 8, but $750 is a really good price. If I look at, if I go to the option out and I look at the past history, number 4, $300 put right here, send that to number 4. Go to the chart, number 4. So we can see way back, it was at 475, and we see it's been coming down. 300, let me zoom in like a little bit more recent. I see it hit $52, $57. Right now it's at 78. So it could, I feel like it easily bounce up back up to 28 at least, and maybe even 52. You know what I mean? These are like maybe levels I would hope to sell at, but now let me see what would it need to happen for me to make that money. So if I go back to this website, I put in SPY, I put in the option that I want. It's the May 20th, the $300 put. Right now it's going for $8 according to this, but I bought it for $13.80, right? And I have 14 contracts. So basically, I have $194 invested in this put, right? So if I calculate it, it's going to tell me. So today's the 12th, right? Today's the 12th. So today, if SPY today is 381, I'll be at $42. I'll be at 21%. But basically, I need SPY to come down to 384 for me to break even. So you see how much movement I need? So this is why it's a little bit harder for me to make the money. But look, if you had got in at that, like the price right now, let's say you got in at 8 cents even, you paid a little extra. If you would do it, instead of 190, you would have spent 112. So now you're already in the money at 390, 387, you're already up 42. By 381, you'd be up 113%. You'd be up $126 off that. So anybody not understand this website?
Got you. I like that website, bro. This is the first time I saw that, bro.
Oh no, I love this website. I dropped it before, but like think about it. Before you get in the option, just throw it up in here.
Got you.
So you can know, okay, what levels do I need to reach? Because it's all about the spread. You know, it's like sports betting.
Exactly.
It's not about being right. Like, of course it's going down, but what's the spread I need to beat? This is the spread I gotta beat. So if I see things not going my way, I cut my losses.
Got it.
You know?
That's definitely in the toolbox.
Yeah. So yeah, y'all got any questions, concerns?
No,
Not really.
sir.
All right, let me do my other one. So the other one, the one that I have more time on it is the July $200 put. July, was it July 15th? June, yeah, July 15th. So this one's out the money, $200 put. So right now it's going for 34. I bought one contract at 43. Overpaid again. But I only bought one contract just to test it out. Because now that it drops on me, I can buy more contracts cheaper. If I had bought, let's say I want to get 10, if I bought all 10, I would have been down a lot more. But by me scaling in and nibbling, I'm able to scale in. And even if I'm gonna get in early and be greedy, then the best I can do is put time on it and just nibble, you know? So, you know, here's the range. So now with this one, I got more time on it. But you see for the 14th, I got 10 more minutes, guys. So the 14th, so by tomorrow, for me to make money, the SPY needs to hit 476. So that's even the fastest spread. But I have more time, you know? So like, let's just say end of the month goes by, right? End of the month. All right, so I got 9 minutes. 3:30, that's how I'll be up on this. So again, I paid too much. You know, so if I can, if I can get in, let's say the price that is right now, $384, I'm already in the money, you know, and this would be a lot more favorable. But it's all about like, we don't know how bad this can get, right? But like, let's say if by July, right? So if by July, if the SPY was to hit 200 or near 200, you could see just off of one contract, this would be up $1,250, you know, but you know, nothing to say the SPY will go that low, but nothing to say it won't, you know, but it's just a good way for you to visualize. But at the end of the day, the cheaper you pay, the more green you're gonna see here, the more room, the cheaper your spread is gonna be, you know, in order to beat. So just wanted to show you that. But I'm doing a special class on Monday just about how to prepare for this crash that in this recession that we seem to have started. All right. So I'm gonna be putting this recording on my coffee page. I'm just gonna leave the link for you guys. If you guys are not already members, you know. Yeah, and also I will be posting more on the gold, just more videos, you know, on stuff that I do every day. Anybody have any questions? Y'all wanna know how Cancun was?
Oh yeah, bro. How was your time, bro?
Yeah, you guys see this 10? Oh yeah, I'm also in 4K right now, so everything's a lot clearer than how it used to be. Yeah, I still see the suitcase in the background. But no, Cancun was really, really good. Like it was relaxing. Pool every day, you know, just going out, just being free, you know. And it's like, I think like what it is too is like having a certain mindset, because to me, every time I go and travel, that's really like my real life. I just came in. What's your take on the SPY for the next few months? All right, I got you. I got about 6 minutes. I'll do a quick SPY recap. So basically, let's go to Trading View. Trading View. Yeah, and did I drop the link in the chat? Let me drop that link. Let me drop the link real quick. I'll shrink everything. I'll probably come 1 second. Paste. Oh, it's not pasting. Weird. I'll just type it. But yeah, I could do this and talk about the SPY. So as you can see, the SPY is down. Not even counting pre-market. I'll count pre-market just because it could open there, right? It's down about 18% from all-time highs. 20% down from all-time highs, you're officially in a bear market. So the SPY is heading to a bear market. And if you look at the interest rate, the mortgage increase, China lockdowns, everything is just pushing us, and we seem to be currently in a recession, you know, and things are gonna get worse before they get better, because now we're down to not fully not COVID levels, but we're down to a level of March of last year. So all the gains that we made up until now, we're giving them all up, and now we're heading the other direction strong. The main thing is this: if you look at it, the SPY has been dropping consecutively 6 weeks in a row. Last recession was last drops, perhaps about 5 weeks in a row. And then you go back, sometimes it's longer, sometimes it's shorter, but it's just showing all the signs that the market is in extreme fear, and it's pushing more so to the downside more than ever, because we're making lower lows. Like, the main thing is we're making lower highs. You know, that's showing the lack of strength, because all before, whenever SPY drops, it always comes back. But right now, it's not making higher highs, which means there's weakness and there's extreme fear. This might take months, this might take weeks, anything could happen, you know, but right now, it's not showing signs of anything strong. Does that answer your question, Connor? All right, let me drop the link. If you guys are interested in this recording, you're welcome. Coffee.com. And this is the link for the video. Slash trading markets kits slash tiers. Yeah, so if you're interested, you could join the gold tier. And I'll be dropping this video with the full analysis. But show up on Monday for the free class. It's gonna be a SPY, basically SPY, right? Market crash preparation. Because at the end of the day, things can go anyway. Things might even come back up and drop again, right? But it's about being prepared for anything, you know? So thank you y'all for showing up to my live, joining the coffee. Y'all got any questions before I go? All right, thank you. Thank you, everybody. See you guys in class.
All right, bro. Thanks.
All right. Yeah, be ready for the market. Hope you're ready for the day. You're welcome. Bye. Oh, Billy just came in. you just came in at the last minute. What's on? Hey, Billy, you came in at the last minute. I got a minute left. I'm about to actually leave the Zoom, but I'm putting the recording up on Coffee.
All right, I got you.
All right, cool. Peace out, everyone.
All right, peace.